As we are all well aware, you can Google just about anything anymore, right, Marcus?
Yeah.
All right, so you ready?
Yeah, I'm ready.
So I Googled things you should consider before you retire. And I was given a long list of things, and some of these we cover, and you do it very well. It's talking about, reviewing your retirement plan, reviewing your pension plan, determine how much money you're going to need, work out your budget kind of thing. But some of these we really haven't discussed, or maybe we just touched upon them. So here we go. I'm going to throw a couple of them. Yeah, let's do it here. Here's one that I thought was interesting here. It says, set up your bank accounts for direct deposit of your pension. This is the most convenient way to receive your pension. Is this just common sense, or yay?
Yeah, that's common sense. The only thing that's interesting is the fact that they reference pensions, because pensions have gone the way of the dodo bird.
They really have, haven't they?
Almost extinct.
Sadly.
Back in the 80s, 80% of companies basically had pensions, and that basically transitioned to about 20%, 15 to 20% of companies have pensions now. But yeah, direct deposit, I think most people do that now.
So if you have a pension, God bless you.
Yeah.
Yeah.
Oh, that's mailbox money, my man.
There you go.
That's good stuff.
There you go. Okay. Here's another one I think we've discussed a little bit, but get rid of debt. It says pay off credit cards or student loans before retiring. These bills are not going to go away when you retire. So your thoughts on that? Do you encourage all clients, hey, let's get rid of some things first before we even sit down? Yeah,
and unfortunately, a lot more retirees are retiring with a lot more debt. We are in this consumerism society where it's buy, put it on credit, and we're seeing a lot of retirees, unfortunately, who have that debt. But yeah, of course, if you can go into retirement without that burden, it makes a huge difference.
This is something I think that would be an interesting topic because everyone's different. But another one of these points was decide where you're going to be living. So I think that's different with everyone. What are you going to do with your home? Will you rent? Or how do you want to live? How much will rent cost? How about utilities? All of that works in. Is that a conversation you have often?
Yeah, so you have to kind of decide, one, is your house going to be paid off and you're going to stay there? Or are you going to downsize to something a little bit smaller and then have more income coming in because your expenses have been lower? In a few cases, we have clients who have decided to pack up and move to Florida, Tennessee, Texas.
Because of tax advantages?
I was going to say, by the way, those are the 3 states I named don't have any state tax. So yeah, so from a tax standpoint, sometimes that makes sense. My aunt and uncle moved from Wisconsin, Racine, Wisconsin, and they retired in Oxford, Mississippi. Don't ask me why.
Are they happy?
Probably because of the weather,
and
they are happy. It's a lot warmer in Oxford, Mississippi.
There we go.
Than Wisconsin.
College town, right?
Yeah.
There we go. All right, let's talk about this now. This one's kind of whimsical, but I think it's an interesting topic here, kind of fun. It says plan a vacation. Now, I don't know if they're saying or recommending this because it's a celebration or, get the vacation out of the way, or do you hear that a lot when people are ready to retire? I'm going to vacation first.
No, but they generally end up doing that anyway because, once you retire, we call it the retirement honeymoon. And so what you see from an expense standpoint is your expenses tend to jump up those first 2 or 3 years of retirement. One is because, yes, you do decide to go travel more. You're not at work, so you eat out more, so forth or so on. And then, of course, after that retirement honeymoon, or the go-go years, so to speak, that tends to tamper down. But, straight out of the gate, we do see a lot of people want to vacation. And it's not just one vacation. It's just a series of travel for a couple of years or so.
It may be also because maybe your employer, you have a lot of vacation days built up. You want to use them before you retire. So there's just another reason.
Yeah.
Okay, here's another one. If you're thinking about moving to another part of the country, be sure you take into account cost of living, because I would think, and you know this better than I, that Louisville is relatively low. I would think this area is relatively low as far as cost of living.
Yeah, it is, and as far as people moving outside of the country or doing anything like that, we really haven't experienced that in our practice. But there are some expats who do leave and want to go retire in another country, because of the cost of living, and a lot of those places the dollar goes along a lot farther than it does here in the States. But we don't really run across that too much.
Do you recommend this? There was another suggestion. It says getting a part-time job. It said consider that. You know, I would think it's just to keep yourself sharp and to have a goal in the morning. Do you recommend that? It's not necessarily the income. Even if you don't need it, it's good to stay busy, right?
Yeah, we actually find a lot of our clients, they do want to do something, whether it is part-time work, just not because they have to, just because you're right, they want to stay sharp, or they just volunteer, you know, and do something, and just so they have that routine of getting up, going somewhere, volunteering, you know, staying active in retirement. Yep.
All right. And the next one says, find a hobby. Probably, Marcus, I don't know, probably for the same reasons, just to stay sharp and be, I guess, you know, totally involved in life. You know what I'm saying? As far as you want to be connected to something and be passionate about something, right?
Yeah, well, there's a couple of reasons for that. One is, you're right, you just want to stay active and you want to stay, you know, have some hobby to stay passionate about something. And then two, and this is for the married couples out there, right? Who, you know, you used to go to that job and y'all used to be apart for a good 8 to 10 hours a day, and now you're retired, and now you're together for 8 to 12, to almost 24 hours of the day. Get a hobby, go do something, golf. Do anything, just because we find that sometimes you tend to butt heads when you're spending so much time with the person you love.
There you
know. There you go.
There we go. That's good
You
advice.
didn't know I'm not only a financial planner, I'm also a marriage counselor.
Yeah, I noticed that. You talked directly to the camera there. That was beautiful. You were giving strong advice there.
Yeah,
okay, and this one I'm going to throw away the notes. This one comes from me, okay? I think a lot of people are thinking this. Gas prices, and we talk about volatility. Boy, we're in the middle of volatility.
Yep.
So, you know, is that considered now in retirement? Because if you're in that window, now you're looking, how long is this going to last? I don't know. If you did, we'd all be rich. But so is that a consideration when you retire as well?
Yeah, absolutely.
Not just gas, everything.
Yeah, well, there's what's called sequence of return risk, meaning that you never know when what you're going to be retiring into. People who retired back in 2009, they retired into basically a 10-year market and a 10-year economy that basically had just gone up. Then there's some people who may have just retired and now they are experiencing, just by pure happenstance, that they have retired in a market where inflation is high, interest rates are starting to creep up, the market is volatile as ever, and you really have to have some sort of plan for that. And so, you know, the one thing that we do in our office is, you know, this volatility that is happening right now. We're really not getting a lot of calls from people panicking. Of course, we do get some people who panic, but for the most part, our clients aren't panicking because, number one, we discuss just that, hey, these market gains, you're probably going to have to give that back at some point because the market is going to do what the market does. It goes up, it goes down. So you're going to experience volatility.
So you had them ready.
Yeah, you have to have them ready. You have to have a plan. And then also your short-term money that you're going to need to live off of, it shouldn't be at risk in the market. Now, your longer-term money that you're not going to need, you know, 5, 6, 10 years into retirement, that money can be in the market and experience this because generally speaking, when we have these downturns, what happens? We tend to get out of them in the market. It might be volatile, but it's always volatile to the top.
There we go. Interesting. Great information. Once again, I encourage you to buy the book, The Retirement Playbook. There it is, available on Amazon. The Retirement Playbook by my author friend Marcus Warren of Warren Wealth Management. We'll take a break, and then, hey, I don't know about you, but I've been watching all of these award shows, and suddenly there's all these new summer trends.